Union County. It's my job to tell you the ground rules of the meeting. We've been appointed by the county commissioners to hear any and all taxpayers with respect to concerns or complaints regarding the valuation of their property for tax purposes. Property owners appear before the Board of Equalization Review have the right to a fair and equitable hearing. The Board of Equalization Review has been charged with ensuring that the proper legal principles have been applied in the valuation dispute for tax purposes. The format is, of the hearing is as follows. The clerk calls the case and locates the property or real property and explains the situation. The appellant presents his or her case. The assessor office offers defense. Both parties will be given an opportunity to rebut or conclude. All questions from either party should be directed to me as chairman. The board will rule on the case or table it and inform the taxpayers when it will be reopened, and the taxpayer will be notified in writing of the board's decision. By statute, the burden of proof is on the taxpayer to demonstrate that the assessment is erroneous. Please silence your cell phones and have any questions. All right, if not, first case.
Just Mr. Chairman.
Yes, sir.
So we know, so everybody's aware of this year, starting this meeting today, these proceedings are being recorded for audio only. They're not being recorded on video. Okay. But we did have to start recording them for audio purposes, just for record keeping, just so everybody's aware.
Okay. Thank you.
Good afternoon, Mr. Chairman, board members. Hearing number one is account number 406796. The owner is A.L. Balcom Company, Inc. And hearing number two is also A.L. Balcom Company. That one's Transportation, Inc. And the account number is 406797. And I'll let the taxpayers' representative speak to you.
Hi, I'm Steve Capps. I'm representing A.L. Balcom. Alan and Marie Balcom, y'all know them, I assume, but Marie has been sick for years, and she's off getting lung transplants right now. And myself and Wanda Layton have taken over a lot of the financial aspect of the company. So we're not questioning anything that was found on the audit at all. We're just asking if you would waive the late fees on both of them. Most of the stuff that was found was ghost assets that we didn't realize that you had to go through and mark them off every year. So even though they were on there, I guess 25% of them still, still counted against us in the audit. And we called, John Kapler's our accountant, so we called him and checked with Johnny, his person, and everything's correct. We're asking for leniency on those late fees, that's all.
Question, maybe we'll get an answer later, but the assets, you say were ghost assets?
Yeah, a lot of them were ghost assets. I'm not gonna say they all were, but there were 97 model computers on there and some stuff that just had office furniture from such and such a time. And when we look back at the papers, it looked like, so Alan would get a bunch of these sent to him all the time, and he'd write okay on them and send them back in. Well, it wasn't okay. They needed to be adjusted, marked off, and they hadn't been. That's all.
So you've paid taxes on this. These discovery years are 14 through 18.
Yes.
You've paid taxes on that, even though.
Well, we will be now. So we think we owe those taxes because they were on. So a lot of it wasn't on there. So when we called Cavalry, he said, no, you're supposed to pay taxes on those. So. Okay, so we're paying taxes on them, but the late fee is the only part that's the question. I think I'm explaining it as correct as I can.
I think what you're saying is the assets were not there from 14 through 18.
Right.
They were on your books. You paid the county taxes for all those years, and you're asking only for a waiver of the penalties on the discovery that was made, correct?
I think that sounds correct.
So you're eating the taxes.
We're going to pay these taxes.
Okay.
And we owe the taxes. Our accountant says we owe the taxes. His person, Johnny, says we owe the taxes. We're just asking for the late fees to be waived. That's
Okay.
They haven't paid the taxes yet, Ray, but they're going to pay the taxes. They just don't want to waive the penalty on not paying those taxes for those years.
what Randy just said.
Yeah, I understand that.
Yeah.
The real dilemma for the taxpayer is the stuff wasn't there and they neglected through some reason
Yeah.
to take them off the books.
So the paper that gets sent from the county is just like one sheet that
Yeah.
says the dollar figure, and Alan would just write okay on it, I guess, in a hurry, and so then when we actually pulled those sheets, there's a bunch of things on there that we didn't actually, we've sold or traded, or it's wrecked and gone, or,
So what you need to do, and you need to take a physical inventory
so we did.
and
So-
match it up to that depreciation schedule once a year, so you
Yes.
don't end up paying the taxes.
That's, yes, sir. So Wanda and I got with the department head of each
Yeah.
of the businesses, and, because we don't know whether some of that stuff's there or not, because it's different companies, you know?
Okay.
And,
Okay,
we
thank
think
you.
we have it right now, so.
I got it, thank you.
Okay.
Dutch, you got any questions?
I don't have any questions.
All right. Yeah. Good. All right, let's hear from the county.
Good afternoon, I'm Jim Crutchfield. I work for a company called Tax Management Associates. Many of you have seen me before up here with the BER. We have a contract with the county to do property tax audits on their behalf, and we did the audit on A.L. Balcom and A.L. Balcom Transportation. That audit consists of taking the financial records, the depreciation schedule, and reconciling the listings that were filed to that information. What we're talking about today is ghost assets, assets that may or may not be on the books, or may or may not be in the plan, but are on the books. So all the county has, the recourse that the county has, is to look at the financial statements. We can't get it in a time machine and go back in time and see where these assets were, or if they were there, if they weren't there. The state has given us some ways of canceling out or disposing of ghost assets. And let me just give you a couple of those ways if I can. If a taxpayer replaces an asset with an asset, then we can identify that that asset was gone and this asset took the place of that asset. So we know what year, what day, what month that asset was replaced. So that's a valid way of getting rid of a ghost asset. And we accept that at the county. Another way would be if a taxpayer sold it to someone else, a bill of sale. So that way we could verify that these assets are gone. But there's no other way that the county can verify ghost assets, whether they're there or not there, without some sort of verification process. And we've gone over that with the accountant for A.L. Balcom, and have done our best to remove any of those assets that we could verify at that point. At this point, it's going to be up to you, the board, to decide to abate a portion of the penalty, all the penalty. That's pretty much up to you as far as what we're talking about. Some of the assets aren't ghost assets. Some of the assets are valid assets that were there that weren't reported. We've got kind of both of those type of things handling. So what we've asked the taxpayer to do is we've asked them to, like Ray Brooks was mentioning, we asked the taxpayer to do a physical inventory of their assets and remove any assets on their books that aren't there as of this particular date. That way the 2020 listing, the one they listed this year, should be correct going forward. Do you have any questions for me, since we're the ones who actually did the audit?
I got just one.
Yes, sir.
So the two options to prove they're there or not, you've gone through that process in the audit, right?
Yes, sir.
And then, according to these numbers, they had $12 million worth of stuff that was ghost assets, 12 million, for all of the years, 14 through 18.
Well, not all the assets were ghost assets. I believe that there were a number of assets that they still have that somehow didn't make it to the tax listing.
Oh, okay, so that's not all ghost stuff?
No, it's not all ghost.
Okay.
No.
So you're talking about 35?
But there's a good portion of assets, and to be totally honest, there's a good portion of assets that they have removed for this year's listing that are no longer there as of January 1 of this year.
Okay. And Jim, you're talking about over $40,000 in penalties, according to your schedule.
Right.
Okay. Thank you.
Thank you.
Chairman, if I may. From the county's perspective, typical practices, if there's a CPA firm, staff accountants involved, we don't make a recommendation to waive those penalties. I think our position with this one is that we would recommend a compromise if the board deemed necessary, or the board can still deem to waive the entire penalty. That's just, from a county's perspective, that's where we are.
Do we need to, we don't need to settle that today? Or-
When you go into deliberations, you will make a decision on
Yeah, okay.
what approach you want to take on that.
All right. Rob?
So, Mr. Chairman, that took care of tab number 1 and tab number 2. We're moving on to tab number 3, which is Daniel Scott Brooks and Casey Brooks. That parcel number is 080360009E, and I do believe the taxpayer is here.
Do I need to, I brought paperwork. It said bring 8 copies. I've got, I don't think I need that. Do you need 8 of them?
No, I don't.
I'll keep one for myself.
Yeah, definitely.
If that's okay. Sorry, I got this letter Friday, and I took my wife to the beach and hauling calves all day. I didn't have time to email it, so I'm sorry. We printed it off last night. You ready? Okay, so they said I had 10 minutes. I won't take that long. I just wanted to kind of lay out my case as to what has happened in here, and I guess the county will have somebody here to go with their side. But so I'm a county resident. I've gone through 4 building projects in my adult life. Okay, every time I have followed the same steps, and I'm not here pleading ignorance, but in a way, I guess it is ignorance because apparently I was wrong on something. So, and I'm trying not to give you too many dates, but 2010, I built a poultry farm, okay? 4 houses, and it was at 6040 Love Mill Road. And what I did, the process I took was I got building permits, electrical permits, well permits, and I did a recorded deed. And that year, I received a letter from the county stating, here's your property valuation, it has changed. The next year, I got county taxes and I paid it. That's the process I had, okay? 2011, I built a house in this county. Building permits, registered deed, county was in and out inspections. Y'all know what I'm talking about. Next year, I got county taxes, paid them. I owe them, right? You owe property, you owe taxes. I'm not contesting anything that was found. The value is the value. So in 2013 is kind of where you slip through the cracks, however you want to word it. Something happened. I did the exact same thing. And I've got proof of what I've got, and I'll present that. But 2013 is the mess up. So the first page on here is this past year, 2019, I built another poultry farm, okay? So just evidence that the system will work. This is 2-house farm I just built in 2019, and it says change valuation. Okay, this is a different address. This is on Bigger Cemetery Road. This is where I live at. That's not really important. But right there proves that, okay, for this farm right here, I did the same thing. Permits, inspections, I did a recorded deed, and I've already this year, not even 2 months into the year, got a letter saying there's been a change. You're going to owe tax on this. That's fine. I do owe taxes on it. Okay, so let's go back to the 2014. That's where somehow the county missed this. Okay, so the second page, and the only reason I printed this out because this is I didn't bring a lawyer. Me and my wife, we don't have an accountant. I'm 35. She's 34. We're doing the best we can. She's a school teacher. We do our own books. You know, it's just life. But the first page, this is just off y'all's the second page, this is just off y'all's website, or the county's website. And all I did was just blow it up so it's easy to read. But it says here, what do I do if I make changes to my property? If changes to your property occur, other than by recorded deed, by plat, or building permits, it is the responsibility of the taxpayer to notify our office during the January listing period using the improvement listing form. These changes include improvements New construction. Okay, so mine was clearly new construction, and it lays out 3 ways here that you can not have to record this to the January listing program, and that is 2 of the 3 that I did. It says either recorded deed, which I have. If you look at the 4th page, 5th page, actually maybe the 6th page, right there is by James Allen Lee. There's my recorded deed in 2013. There's one of the ways. The other one, it says by building permits. And just because I got this letter again on Friday and didn't have time to go pull the building permits, I called the county a couple days ago, Monday. They emailed me, here's my electrical permit. Medlin Electric, it's got the date on there. I did 2 wells at that property. That's in the county's, I'm sure you can pull that. But I mean, the fact was there was multiple inspections done, multiple permits done, a recorded deed, everything that the county says I'm supposed to do, I did. Now on this page right here, all this is, I just printed this off, this is on y'all's table up there in the tax administration's office. This is literature y'all hand out to people. And it says this, what about real estate? Real estate is considered real property, not personal property. It is automatically listed every year. Therefore, you do not need to list real estate, but you are required to list personal property. So again, I'm not contesting the value here. There's basically 5 years here. You see this bill for $18,000. Those taxes were owed. I thought I was paying property tax. It's as simple as that. I built that first farm in 2010. Again, I'm not trying to complicate numbers. 2010, I built a farm at 6040 Love Mill Road, okay? Paid the taxes. In 13, I expanded at 6040 Love Mill Road. I built 4 more chicken houses at that property. So in 2014, when I got my tax bill, I paid my taxes. You know, I got my tax bill. Again, my wife, hey honey, you got county taxes today. It was September, like always. Maybe we need to wait till December. We need to pull out of the money market. So when it came time for taxes, it's like $12,000 a year. Pay the $12,000. I didn't look at it and say, well, wait a minute, honey, the taxes, I should owe more than that. Let's contact the county and see how much more money I should owe. I just didn't do that, and that's my ignorance, okay? That's my fault. I'm not contesting that value's not there. I'm not contesting that going forward I need to pay that. I will pay that. I do pay my taxes. I just think I don't want to word it the wrong way because I'm not very sophisticated in my vocabulary, but I just think it's wrong for the county to miss something on their end, save up 5 years and hand me a bill I can't possibly pay. I'll close with this, just as a human being. Last year I was audited by the personal property side, and it was $12,000. Wound up paying $9,800. I messed up on that. I did not record the right thing that we just talked about. I did not. There was assets there. I didn't contest a thing. I paid it because I owed it. I made a mistake. You do what's right, right? The golden rule, do unto others as you have them do unto yourself. This is different in the sense that the county messed up, in my opinion, and now they're coming back on me with this. And I just want to ask you, as a personal human being, I'm a chicken farmer, okay? How many of y'all could sustain $30,000 in extra tax bills in a 4-month period and sustain that? I'm not here, I'll end with that. This is unsustainable. I appreciate your time. I'm sorry, I don't want to complain.
Well, hang on, Mr. Brooks.
That's my case.
All right. Ray, you got any questions? Doug?
I think the only question I have is just the real estate taxes. So through the audit or the visit on the discovery on the personal property, they captured the equipment and stuff.
They had captured the equipment that I had. There was some equipment from 14. It was all kinds of equipment, but it wound up being, you know, whatever. The total fee at the end of it was I paid like $9,800.
Yeah, so you're
That's already been paid.
you're square on all that with the expansion that you did in 14
Yes, sir.
as it relates to the equipment. It's
Yes,
just
sir.
the real property.
It's the real property that, and apparently I guess that maybe flagged it. The fact that I went through that audit, that it flagged the real estate audit.
Okay.
But I learned my lesson. I built those 2 new houses, and I went up here to the county already. I said, look, there's another $300,000 of equipment. You need to add that to my personal property. So I don't want to be in this situation.
Okay. I got you.
Now, you said something about 30,000, am I missing something?
My new equipment on my new farm was $300,000. I went ahead and added that. That was just an example. I mean,
Okay.
that has nothing to do with this.
So the 18, or the 19,000 is what you're,
Yes, 18,000 is what I'm here for. I'm just saying that I went ahead In January, I paid $9,000, and then I get this bill literally 3 weeks later for $18,000. I just,
Mike, you got anything? Thank you, Mr. Brooks. We'll get here from the county.
thank y'all very much.
How's your dad?
Hey, good afternoon. Our side, we don't have anything really to add a whole lot to that because what Mr. Brooks said, a lot of it is correct. The appraisal side was doing some of our internal audits. A lot of that's not actually going to the field. We do a lot of that through computer. We can see the aerial photographs. So some of that, you can see what was on the property beforehand. You can see what's been added. So it was caught, not so much from the personal property audit. That had nothing to do with what we found. A lot of times that does happen. We have started an internal process to where anything that goes out farm related like that, again, point forward, we started that. Rob, you might correct me, a year and a half ago, maybe two, somewhere along in there. So when those audits go out for personal property, we also send out somebody from the real estate side so that, we don't want the taxpayer feeling like they're being picked on. So if we're on one time, we're gonna try to do both sides at the same time, just to make sure everything's listed. So Mr. Brooks is right, the personal property was audited back in, I think it was 18, and went back several years and did audit, the personal property side. So when real estate was looking at, like I said, the internal audit, they did see that the poultry houses were added. We did not have them on our record. So we had to go out and actually, add those to the property record card. So in doing that, office followed, the general statute, which that's in your packet there from us, which is the 105-312, which states that we do go back, and then I'll read just a verbiage of that. It says, when property is discovered, it shall be taxed for the year in which discovered and for any of the preceding 5 years during which it escaped taxation. In accordance with the assessed value, it should have been assigned in each of the years for which it is to be taxed and the rate of the tax imposed in each such year. So that's the only thing that we did. We went back and added the value or discovered the value for those 5 years just on the real estate. So we didn't go in and add any interest or any penalty. In addition to that, we're actually just capturing the value for those years and what the tax rate should have been. And so when that's calculated out, that $19,000 tax bill is for those 5 years.
I heard you say that you're doing it now.
Well, we're doing for like the last 2 years, we've been going together,
Okay.
personal and real estate.
Okay. Ray, any question?
Steve, the tax bill, 18,009, that's the 19,000 you're talking about?
Yep.
Says up here, tax year 2020.
We actually generated the bill for 2020, but we give up until the January, I think it's January the 5th on the tax bill to pay it,
Okay,
because we actually generated the bill. in
gotcha.
2020. Yeah.
Thank you.
On a discovery tax bill, the bill year is the year in which the bill is generated.
Okay.
It may go back for those 5 years, but it becomes a tax bill in the year in which it's actually generated. And the reason this was sent in January, we don't do discoveries in December of any calendar year, because that only gives the taxpayer 30 days to pay it. And so by us delaying sending you that bill from December to January gives you a full year to address the bill from this standpoint, as well as the and/or a payment function. So we do that as a courtesy to taxpayers. We try to make it as easy as possible, if you will. Nothing's easy about it from a taxpayer standpoint, but we try, from an administrative standpoint, we try to make the windows of opportunity as big as possible.
Well, it wouldn't give him the opportunity to come before us. either.
Right.
Yeah.
Right.
And none of this includes any kind of penalty because we didn't catch it. Mike, you got anything? All right, thank you. Thanks, Steve.
Mr. Chairman, hearing number 5 is a staff recommendation on a late exemption application. The parcel number is 06090011C, and the property owner is Threshold Church. Do you want me to go ahead and? Okay. Basically, this is a late application, and according to statutes, of course, the tax office cannot accept an application that's filed after the listing period. But our recommendation is that the board approve this application, that the church is qualified for the exemption through ownership and use. It's just that we can't accept it because it wasn't filed in January. And the reason why the church didn't file it is because they didn't know they needed to make application. And, you know, that's kind of par for the course for some people. You know, some people know to file, some people don't know to file. And if you have any further questions, Steve is my administrator for the exemption program, and he can handle those directly.
Okay. Thank you.
Okay, if you want to, we'll go ahead and go on to hearing number 6, which is also a staff recommendation. This is to prove a late list present use, a late application for present use value. Again, the property owner, it does qualify for present use value, but he didn't file again during the listing period, just like the church. Again, we can't accept the application because it wasn't filed timely, so we would bring the recommendation to the Board of Equalization and Review that you accept the late application for present use value. Again, Steve is my administrator for the present use value program. If you have any questions, he can answer that directly, but our recommendation is that you approve the late application. And that concludes our agenda today, gentlemen. Okay, so do you want to go back to tab number 1 and, well, basically tab number 1 and tab number 2 and enter into our phase of deliberation for the A.L. Balcom late list penalty waiver request?
Yes, ma'am.
Okay.
You gentlemen have any more questions, Ray? Dutch?
I don't think I have any other questions.
Yeah, what has been the county's position on these type of assets in the past? As far as the waiver of penalties?
Really, the county's position in relationship to waiving late list penalties is if it's a self-filer, like let's say Daniel's case, where he's not a CPA and he's the one who's filling out the listing form. We don't normally recommend, we recommend that those penalties be released because, you know, the taxpayer's not as familiar with accounting principles. Normally what we would say is that if a CPA was filling out the listing form, that they would know what the general accounting principles are and would know to dispose of ghost assets or assets that have been disposed or, you know, sold or gotten rid of. We in the personal property department did look at recommendations from both Kurt Boone with the Institute of Government and with David Duty with the Department of Revenue. And it's kind of a gray area with ghost assets because the asset isn't physically there. And this is really the first time we've ever had anybody ask us to waive the late list penalties because of ghost assets. So that's why we're bringing it to you. And we, you know, I would say the taxpayer definitely has a point. I would say that TMA definitely has a point. It's a 50-50. I mean, I don't know what else I can say.
I think that's where in this situation we would recommend, typically we would not recommend a full waiver of the penalties for a company with a CPA involved. I think in this case, that's why we're recommending maybe a compromise as opposed to a full waiver.
Because of the non-CPA involvement in this?
No, there is a CPA involved in this.
Oh, there is?
Yes.
Yeah, there is a CPA that did fill out the listing form.
But would
it's
be-
more of a matter of situs, you know, because that's the other part of personal property, is whether the asset is physically located at that point in time at the facility, where this enters into a gray area.
I mean, that's our staff, our recommendation would be to compromise. The board has its own authority and pleasure.
Because part of it is he was still paying taxes on property that, on some of it. that wasn't-
Absolutely.
Yeah.
Yeah, absolutely. So first and foremost, he's paying taxes on that asset no matter what.
Right.
Okay, so the second part that we're looking at is only in personal property do we assess these late list penalties. Just like in Mr. Brooks's case, we don't do it with real property. So I think the taxpayers, personally being reasonable and requesting that we look at the late list penalties due to the fact that the asset may or may not have been located there. And, you know, according to Jim, he said, you know, definitely some of those assets weren't located there, but because they were on the books and there's no evidence, like a bill of sale or, you know, some paper trail that says that it was disposed of, because we asked all those questions when we went out to the field audit, we can't physically dispose of them. The taxpayer can, but we have to reconcile the books, if I've said that appropriately.
Van, when you just mentioned the word compromise, did you mean waive penalties?
Well, you have a waiver, you have a compromise. Compromise would be you find some percentage
Okay,
there.
Gotcha.
And so this comes under statute, it's 15312, where once a tax bill has computed and been computed, penalties applied, the Board of County Commissioners or the Board of Equalization and Review, if the board has granted the BER that authority, which they did last year. So these cases come strictly before this board. They have the authority to uphold, compromise, waive anything related to penalties and or discovery tax bills.
good. Well, I like the fact that Mr. Crutchfield did an excellent job, as he normally does, in his field audit, and the taxpayer made a definite choice to go ahead and correct their books. And in that regard, and as Dutch just mentioned, they paid taxes on the property all these years that wasn't even there. So I would make a recommendation, we do some kind of a percent, maybe 50% waiver or more. Dutch?
In my mind, I was
Is that a motion, Mr. Brooks?
What's that?
I was thinking about 65%.
55?
That's 65.
65? Right, good.
I make a motion that we reduce the penalties by 65%.
I'll second that.
All in favor? Well, but that's $13,969.40.
Remove.
No, that's the taxes that they'll end up paying.
That's
That's
the balance.
35% of
Okay,
the total tax.
35% good. 13,000,
$969.40.
yes, sir, we can do that. Alrighty, so that takes care of tab number 1 and tab number 2. Now we're gonna move on to tab number 3. And this is Daniel Brooks with the discovery of missed improvements.
I think we've had this come up before,
Yeah.
and I think the only part that, when Mr. Brooks was bringing that up, I think that point in what we got in the material here about how the real estate's treated, but still it ultimately falls back to the taxpayer. I mean, I want to make sure I understand that right, because I'm just looking at what he pointed out here. Because it sounds like the personal piece has been squared up.
Yes, sir. The personal
Yeah.
property piece is fine.
Squared up.
Again, I would say,
Let me add some information to this, and Mr. Brooks may not be fully aware of the legal process around building farm buildings. So, and this is a conversation that we've had many times with several different entities throughout the county, some big, some small. From a permit standpoint, and he's absolutely right, when a building permit is purchased, that tracks through to our office. However, in farm buildings, no building permit is required. The electrical permit, which you provided a copy of, is required, but they do not purchase a building permit. So from a farm building construction standpoint, that does not flow through in the deed. I looked at the deed, I don't think there's any mention specifically in the deed of chicken houses. Go on.
That's what James Allen emailed over, I didn't, the whole deed is like 30 pages.
Yeah, I didn't see anything specific about the chicken houses, but, so from a tax office standpoint, when you go buy, if you were to go add an addition to your house, buy the permit, that's gonna make its way to our office, and we'll pick that up. Sometimes it's missed, sometimes it's not. From a farm building, if you were to build a pole building, a chicken house,
A shed.
Shed, any other kind of examples like that, we will not get a permit on those. Because if you pull a $250 electrical permit, that could just be replacing a water heater in your house. And that's what the value was on this one, I'm assuming. Now, was that the permit from 2013?
Yeah.
Okay. So we wouldn't see any kind of building permit related to those chicken houses. By statute, any improvements at that point, as he pointed out, are required to be listed by the taxpayer. But because it's real estate, we look at it differently than we think it falls somewhere in the middle. We don't get the information, but we're required by statute to review real property 1/8 of our parcels every year. And so that's often when we will catch these situations with farm-related assets that have been built. We will catch those in our parcel review process. I think there's some taxpayer education, not in your standpoint, but just in general with the county. We're working on some stuff with the Ag Extension Office and things of that nature now. I spoke with them in the comprehensive plan process that they're going through a couple of weeks ago. And we're gonna set up some things with Andrew Balcom, who's our current extension director, to do some informational sessions, if you will, for farmers. From that standpoint, the ultimate, by law, the ultimate responsibility does lie with the taxpayer. Normal business process and normal construction process, we'll get a permit. Farm buildings are one of those situations where we will not, unless we had another farmer say, are you telling me I gotta go buy a permit when the law says I don't have to? I said, no, you don't have to go buy a permit, but you need to call us. You need to tell us that you're building these buildings so that we can get our records correct. And that's kind of how the process works. I fully understand where you're coming from. So I understand the situation you're in.
That's when I
Yeah, come on, yeah.
only thing I just say
come on
is,
up here, Daniel.
I did it 2 times,
Yeah.
and both times I did, like I said, I just did it 2019, and they contacted, they called it, and I did 2010, they called it, so I didn't, truly, I'm pleading ignorance, and I know that's not a good case, but I didn't know that you had to come up, I knew personal property you had to report, you had to come up here every year and file that sheet, but I thought that, the only thing I don't understand is, why did 2010, did they catch it? Why in 2019 did they catch it? You know what I mean?
Was it 2010, was that resident, was that a house or was that chicken? That was poultry.
2019 was 2
Yeah.
poultry houses.
Not sure why, I can't speak to that.
Yeah, and I don't need to,
We do review parcels fairly regularly, so we may have stumbled upon, the appraiser may have seen construction. In the 2010 situation, 2019, we have gone to the permitting folks and said, hey, please make us aware of electrical permits, because often these have been missed in this situation. But I think proactively moving forward, we're trying to catch these, so this unfortunate incident does not happen in the future. So I would suspect that I can cut it off of the information we have now requested from the permitting department, but historically did not receive.
That is a change in the process. I forgot to mention that. 2018, I think, because we had another situation arise. In 2018, I went to the inspections director. I said, listen, here's the situation we're dealing with. And we said, I'm the county manager at the time. What can we put in process so that we don't have these things fall through the cracks and then the taxpayer ends up with a potential big tax bill like in this situation? And so we come to the conclusion that they're keeping a list of people that come in that claim exemption from building permits. And once the electrical permits and those things have been purchased, they send that information to us now and say, hey, here's a farm building, potential farm building that may be being built, you want to check on this parcel. And then, so we modify our processes to try and avoid this in the future. It just so happened you built these in 2014, so that was 5 years earlier, and which is why we're where we're at now.
Yeah, I learned the hard way, Dan. Myself, I'm sitting on the board now for, I guess, 3 years, and heard this very argument by the county, and I'm sitting there, and I built, add on my house, and I had looked at my tax bill, and they hadn't caught it. And I'm sitting there, and said, well, I'm on this board, so I told the county office, I said, now, I made some improvement, and they, like Van said, they came around every, 8 years or so and do a physical assessment or whatever, so I knew I had owed taxes from the previous year because I had built it. And so, I'm not saying I'm do good or anything, but I turned it in because I didn't want a big tax bill either. I wanted, to know that what my tax was gonna be for this addition I made for the upcoming year. So I've sat where you sat and learned, as you have, learning about this. And it's regretful that the situation is like it is.
Well, I feel like this man needs a compromise also, because I've been in the poultry business, and that kind of money is gonna really put him,
Well, I agree.
unless he's a lot better at it than I was.
Well, I like to eat. I appreciate him growing.
Especially with the difference on how the farm buildings are treated. I think that's,
Well, he's right, I didn't have to permit mine either.
yeah.
But you do have to do electrical, and like you said, so I can see how that would happen.
I'm with you, Mike. I think there's a little bit on both sides. I mean, Dan spoke to it. I mean, I think as the property owner, when you're looking at it, you've got the responsibility to kind of look at it and make sure it's there. And, if you've got 4 poultry buildings that aren't there, you need to try to catch that. That's a big miss. But I understand. I see both sides of it. I'd be amenable to a compromise on it.
I agree with you. Yep.
Do I have a motion?
What you thinking, Mike?
What you thinking?
No more than 50%.
Half of it. Is that your motion?
Yes.
I'll second.
All in favor?
Aye.
Aye.
And to reiterate that, that's, the motion was to tax him on 50%.
Of that amount.
Just reduce the liability
Mhm.
by 50%.
Still do January 4th, 2020, or by then.
Oh, absolutely. Yes, sir. Okay, thank you.
Mr. Brooks,
Tell your dad I said hello, Dan.
hang around with us.
Alrighty, Mr. Chairman, so tab number 5 and tab number 6 are our staff recommendations to approve late applications. one for exemption, which was tab number 5, and one for present use value, which was for 2 parcels, and that's under tab number 6.
You gentlemen have any problem with that? Agree with staff recommendation?
I make a motion, we accept the staff recommendation for tab 5 and tab 6 as presented.
I'll second that.
Everything, all in favor?
Aye.
Ray, second?
We approve, yes.
Okay,
Yes, ma'am.
great. All righty, Mr. Chairman, that's our agenda today.
All right.
Thank you.
Thank you.
Ladies and gentlemen. We'll see y'all next Monday morning, I guess. Tuesday morning.
Ladies and gentlemen, and me.
And-
Is it 9 o'clock Tuesday?
Beg your pardon?
Need a motion to
Tuesday morning.
adjourn.
Yeah, let me have, one of you fine gentlemen make a motion to adjourn.
So moved.
Second.
All in favor?
We'll see y'all Tuesday.